Good morning to all traders and welcome to this market insights video on FX miners. Despite I'm going to talk about the Canadian yen and the Euro QE today. There's just a few headlines that I can't really ignore. For example, Trump saying that the data nationwide are suggesting that we're past the peak, but at the same time, we are recording the highest daily death toll in the US. So it's a bit controversial. Now, at the same time, some US data, including retail sales, including industrial production, shows figures that we haven't seen since the World War. So it's a bit early to say that we are past the peak, and it's very early to say that the coronavirus situation is going to improve as soon as political figures actually expect. Now, with that being said, on other economic data, we had the Bank of Canada delivering their interest rate decision. Of course, it didn't change anything there. They sounded optimistic too. However, they dropped the forecast for GDP. And that, I think, is going to affect the Canadian dollar in the short, medium, perhaps even a bit longer term, or until at least we start seeing an improvement in the situation of the lockdown. But the Canadian dollar is also very dependent on the oil market, so do not forget that. The other part I want to talk about is the Euro QE, because I also see a very good opportunity here, and this is what we're going to start with. The New Zealand has been very good with the response around the coronavirus pandemic. The other thing is that, the European Union hasn't. There is still a battle between European countries. At the same time, if we take into consideration that QE doesn't really depend on the oil as much or on the commodities, once the lockdown measures start easing, it will be the one that is going to start moving higher. I do really think that it will perform better than the European currency anyway. So that's the reason I want to start. And I want to start with the daily here, because I think that we have had a cycle degree correction ending up here at the, we missed the 2 psychological level, but it doesn't really matter. I think that we've ended down here, right? We've had an A, B, and a C, okay? So with that now ending, we are most likely looking for this move to the downside to be primary wave 1, then 2, 3, 4, and 5 to take out wave C, because the move down to A as well is a 5-wave move to the downside, right? So we expect waves A and C to have the same structure, which means a 5-wave to the downside, right? So since we bounced over that level now, right, we can expect this to be to complete intermediate wave 1 somewhere around here. Then we'll have 2, 3, 4, and 5. Wave A, I believe we're gonna go down to the 163.50 for wave A, okay? Then we're gonna get a 2, either sharp or elongated. Then a 3, that's going to break obviously below that area, and most likely we're going to break the 148 as well, 146, whatever that wave is for wave 3, and then we're going to see the wave 5 extending below wave A in the longer term, 138. So this is a very huge opportunity, and I would really pay attention to see what happens in the short and medium term, because we want to really stay below the 190 ideally, right? And on the downside, we want to see successive breaks of previous highs, okay? So that one, and then of course start moving to the downside for the longer term opportunity that we have just identified here. Now on the Canadian against the yen, CAD yen, I've talked about this opportunity quite a few times now. I see this as an ending triangle, right? Because we've got an A, we've got a B up here, and then wave C down here, which seems to me to be ABC, ABC, yeah, ABC, WXY over here for wave 4. We have identified even that opportunity up here, to be honest. And then we'll move down. So I think, because this looks impulsive, we've done wave A down here. So now we're moving for wave B, right? And then we're going to see prices moving down to wave C. Once we take out that level over here, which can be anywhere between the 72 or even the 71 or lower, then we can start looking for prices to move higher. Now, since we are here on the daily chart, right, and because this move looks a little bit corrective over here. It reminds a triangle, right? So it could turn out to be a triangle. So we could have, you know, A, B, C, D, E over here, yeah, and then start moving lower. Or the other thing is that we've got this correction happening over here, and this move over here suggests that we have 1, 2, 3, 4, and a 5. Then that would mean that we're going to have an A, B down here, and then 1, 2, 3, 4, and a 5 for wave C, which means that wave B in the minor degree can come even up to the 81, 60 or so. However, I really doubt that is going to be the case because, I mean, it's going to be a battle between the Canadian dollar and the yen. Both are expected to be weak for the quarter, to be honest. But I believe just purely on safe haven flows, the yen will be able to push down the Canadian dollar as economies are preferring safe haven flows anyway. So this is for the day. I will see you again next week